Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of all those boring corporate filings. I hope you have your coffee ready because today's report is long and surprisingly a bit spicy with the governance changes and 2 shareholder proposals. And we're diving into ServiceNow's latest proxy statement, which is basically their homework assignment before their annual shareholder meeting. In it, we will get all the details about their performance pay and who's up for election. So let's get to it. ServiceNow is having their yearly meeting on May 22nd, 2025. Because it is a virtual meeting, anyone with their 16-digit control number can join online, submit questions, and vote. All the action will be happening at www.vaxshareholdermeeting.com/neo-2025. The proxy statement was officially filed with the SEC. This document contains all the information shareholders need to make informed decisions about voting on important company matters. ServiceNow is highlighting its strong growth in 2024. Subscription revenues grew 23%. They had a 98% industry renewal rate. Their total revenues were $11 billion, a non-GAAP operating margin of almost 30%, and a free cash flow of $3.5 billion. Roughly 31% of the 1% it won through. ServiceNow is proud that they have delivered continued superior shareholder value. Over the past 5 years, their total shareholder return significantly beat their peer group and the S&P 500. Strategic milestones include being recognized in Fortune 500 for the second year in a row, exceeding $10 billion in revenue, serving approximately 8,400 global customers, exceeding $10.6 billion in subscription revenue, and finishing 2024 operating at a rule of 54 plus. When picking the board members, the company considers many factors such as leadership and governance, risk management, strategic thinking and skills, financial experience, and non-corporate experience. The company has 9 director nominees: William McDermott, Chairman and CEO, Susan Bostrom, Teresa Briggs, Jonathan Chadwick, Paul Chamberlain, Lawrence Jackson Jr., Frederick Luddy, Joseph Quinlan, and Anita Sands. Some robust board oversight and structure bullet points include 100% independent committee members, a strong lead independent director, regular executive sessions of independent directors, comprehensive board risk oversight, governance committee oversight of environment, social and governance committee oversight of environment, social and governance activities, a rigorous director selection process, and a board with a broad range of experiences and perspectives. William McDermott serves as both ServiceNow's chairman of the board and CEO. The board believes that this leadership structure provides the company with clear and unified strategic vision, strong and effective leadership, particularly in the context of macroeconomic challenges facing the industry, and flexibility in long-term succession planning. The board has established the Audit Committee, the Leadership Development and Compensation Committee, and the Nominating and Governance Committee. The composition and responsibilities of each committee, each of which consists entirely of independent directors. The board is responsible for overseeing the risk management program. The board administers this oversight function both directly and through its standing board committees. At least annually, the board reviews with management the enterprise risk profile of the company, noting the highest areas of risk and the controls in place to mitigate those risks on an enterprise-wide basis. The board, in coordination with the audit committee, oversees cybersecurity risk management. They receive regular reports from management about the prevention, detection, mitigation, and remediation of material information security risks, including cybersecurity incidents and vulnerabilities. Moving on to the items that shareholders will be voting on, the board recommends a vote for each nominee for director. The board recommends a vote for proposal number 2, which is to approve executive compensation, as it is a program designed to attract, retain, and motivate named executive officers with a strong link between pay and performance. The board recommends a vote for number 3, to ratify the independent registered public accounting firm for 2025. The audit committee appointed PricewaterhouseCoopers LLP as the independent registered public accounting firm for 2025. Proposal number 4 is also recommended for, and is asking to approve amendments to the Certificate of Incorporation to reflect Delaware law regarding officer exculpation and other immaterial changes. Again, the board recommends a vote for proposal number 5, amendments to the Certificate of Incorporation to eliminate supermajority voting provisions. Now for something completely different. Proposal number 6, the shareholder proposal regarding right to cure purported nomination defects. The board recommends that you vote against it. This proposal would introduce unnecessary uncertainty and enhance litigation risks, creating potential disruptions to the director nomination process. Lastly, proposal number 7, to remove the 1-year holding period requirement to call a special meeting of shareholders. The board also recommends against. They say it's because removing the 1-year holding period requirement could subject ServiceNow to regular disruptions by shareholders with narrow short-term interests. From this point on, the proxy statement just includes some routine reports of the board's various committees. The CEO to median employee pay ratio for 2024 is 188 to 1. The total 2024 compensation of the CEO was roughly $37.5 million, while the total 2024 compensation of the median employee was $99,000. There's an appendix in the proxy statement that includes a reconciliation of GAAP to non-GAAP metrics and other information. The last section, which has some forward-looking statements that always come with a warning, they'll tell we know what we've seen so far. Regarding the company overall, ServiceNow seems to be well positioned with strong financials for the moment, great growth in the subscription service sector, and great customer retention. The changes to the charter seem like a great deal to give power back to shareholders. Since management seems so set on its vision, there might be an issue in the future. If shareholders don't have a meaningful way to change management are so strongly against it, I'm leaning towards thinking there's definitely some hidden agenda that average investors such as myself aren't aware of. So be sure to make an informed decision after reading this filing carefully. Remember, this is just a summary, so make sure you check the documents and see if that's the right company for you. Thanks for watching. Be sure to like, comment, and subscribe, and I'll see you in the next one.